Hi friends, welcome to our Tax TV channel.
What is FAR analysis?
ALP is based on a comparison of the prices or margins adopted or obtained by related parties with those adopted or obtained by independent parties engaged in similar transactions. One of the factors affecting comparability is the FAR.
Why is FAR analysis important?
FAR analysis is performed to accurately identify the characteristics of the taxpayer's business as well as of their counterparts. These allow a picture of how proportional the risks the company is bearing and the profit it is generating. For instance, the level of return of a full-fledged manufacturer cannot be compared to a toll or contract manufacturer because the latter has generally fewer functions, assets, and risks. Likewise, the level of return of a full-fledged distributor cannot be compared to a limited-risk distributor or sales agents. It is only when the proper FAR analysis and characterization is conducted that we can perform meaningful comparisons of the price or level of income of entities in a controlled transaction against the price or level of return in a similar independent transaction.
How is FAR analysis done?
FAR analysis is a mapping or gathering of the economically relevant facts and circumstances surrounding the transaction between two or more related parties if applicable. It allocates the functions, assets, and risks among the parties involved in the controlled transactions. Typically, the FAR of each unit or division of the entity that is relevant to the controlled transaction is identified. For instance, in a manufacturing entity, the functions performed by the research and development, procurement, production, logistics, sales, marketing, and advertising, finance department, among others, are identified and documented. The assets used in performing various functions such as land, buildings, plant, machinery, equipment, and intangible assets such as production know-how, patent of product or license of trademark, etc., should be identified and documented. Last, an appraisal of risk is also important in determining the arm's length price or return. The possible risks assumed that should be considered in the analysis include market risk, risk of change in cost, price or stock, risk relating to the success or failure of research and development, financial risks such as changes in foreign exchange and interest rates, credit risk, etc. In practice, one cannot be expected to compare all functions, assets, and risks. Hence, it must be emphasized that only functions, risks, and assets that are economically significant in determining the value of transactions or margins of entities should be identified and compared.
Where do we get the information?
The source documents for compiling information relevant to the FAR analysis are readily available from within the company, such as annual audit reports, segmented financial statements, organizational charts and/or group structure, the list of all employees with related job descriptions and the authority of relevant employees, the product or service flow manual, pricing policies, etc. Subsequently or as needed, interviews with the various personnel of the business units can be conducted to further understand or validate the information on hand. For example, key officers may provide the context or rationale behind entering into the affiliated transaction, validating with the finance personnel that the prices in intercompany agreements are actually followed. Inspections may also be performed with the production team to verify the existence of equipment, or confirm the risk of inventory shrinkage. Again, facts are important in producing an accurate FAR analysis.
What do we derive from FAR analysis?
After performing the FAR analysis, one should be able to draw conclusions about the characteristics of the business. For instance, a business may be characterized as a toll manufacturer, contract manufacturer, fully fledged manufacturer, fully fledged distributor, limited risk distributor, commissionaire, commission agent, service provider, and so on. Again, such characterization is essential in finding the correct comparables which will determine an appropriate price or return received by the entity or its related parties considering the functions performed, assets used, and risks borne by each party. FAR of both the tested party and the comparable companies have to be seen and analyzed. It is a part of the TP documentation. Once the FAR analysis is completed, most of the work is completed in preparing the TP documentation or TP study. Please subscribe.